The price of gold will reach 38,000 US dollars per ounce. If you heard that sentence and were shocked, don't be, because there is no gold price anywhere that will go up to 38,000 US dollars per ounce. Some people saw this number and asked me about it. I was like, whoa, what kind of price is this? So I went and looked it up, and this 38,000 US dollars per ounce thing, it's not a target price. It never was either. It's a price based on a theory that if gold were used as a central asset to balance global trade, what would the price of gold be? So if anyone wants to know how this number came about in this video, how it's calculated, how it's computed, which theory it comes from, and whether it's even possible, I've prepared all that, so I'll tell you about it. And there's another thing that gold enthusiasts want to know, which is, hey, there's news that there's going to be a massive gold price adjustment on July 24th. And today, when I'm recording this, it's already July 29th. That so-called massive gold price adjustment hasn't happened yet. The question is, what happened and what is about to happen? This video will definitely tell you all about it. For those who follow the Sin Money Monster channel because you're interested in money but stay for the gold content, this video is gonna be a long one, folks. This video is sponsored by ZONTES motorcycles. They are truly so cool, and it's very easy to support the Sin Money Monster channel. Please hit like, share, and leave a comment to chat with us, and don't forget to subscribe as well. And if anyone wants to support the Sin Money Monster channel so we can keep making independent videos like this for a long time, you can become a member. We've even got some cute emojis for you to use now too. Thank you. Let's start with the major gold price adjustment first. Like, hey, what's going on? Picking up from our previous video, China is crashing the paper gold market. China is using a method to attack the paper gold market by stopped trading paper gold entirely. They are using their massive influence to attack this market. You might ask, what's the progress? Has anyone closed their account? No? Has anyone actually shut down the service for the market yet? China used what is considered the largest bank in the world to shut down this service. Whether it's China Construction Bank, which is the third largest in the world, ICBC, which is the seventh largest bank in the world, China Merchants Bank, Postal Savings Bank of China, Bank of Communications, China CITIC Bank, as well as China Guangfa Bank and Ping An Bank. In total, 8 banks have completely disappeared from the paper gold market within just 2 months. And these 8 banks combined, if you take the market cap data from companies' market cap and add them all up, it equals a value of 1.13 trillion US dollars, which accounts for as much as 7.6% of the market cap of all publicly traded commercial banks worldwide. That's not a small amount. It makes people think, wow, if it's going to close with such a massive market cap, something must be happening to the price of gold. And it has forced the hand of Chinese investors looking to invest in gold. There are only 3 options. 1, sell off all paper gold contracts. 2, close the position and switch to other assets. Or 3, exchange them for physical gold to keep yourself. Which, of course, means that paper gold contracts for retail investors in China are practically non-existent now. What everyone around the world was eagerly waiting for was the enforcement date, which was July 24th, right? Everyone thought, once it's enforced, gold prices are going to skyrocket. But as it turns out, on the day I'm recording this, July 29th, gold prices didn't exactly shoot up like many people thought they would. Instead, they've been steady, maybe even dipping a little. Something like that, you know? And if we look at the big picture, gold since the beginning of the year, when it hit an all-time high around 5,600 US dollars per troy ounce, now it's dropped down to the 4,000s, which means it's down about 30%. So people started thinking like, is China really doing what they say they're doing? Is it a bluff? It's not that they aren't doing it, and it's not a bluff because China really is doing what they said they would. But the thing that needs to be understood is that when the market takes action, the impact on the market never happens overnight, like you take action and it just happens instantly, unless the market crashes. It never crashes in a single day either. China has been laying the groundwork since 2002, creating the Shanghai Gold Exchange with a system for actual gold delivery and so on. And China has been consistently working on this physical gold system, meaning gold you can actually touch. The question is, was the step taken on July 24th a major one? Yes, it's a big step, but that doesn't mean this single step, no matter how big, is gonna crash the Western world's paper gold market, baby. But what's interesting is what happened during the time when gold prices were dropping. Even as it dropped from its all-time high, down 30%, or even now while it's still falling, China, big brother China, is still aggressively sweeping up gold into its reserves. And the ones sweeping up this gold aren't just retail investors, individual retail investors. No, it's not. It also includes what we call smart money, specifically the People's Bank of China, which has been actively buying gold for 20 consecutive months now. This marks the longest streak of continuous gold accumulation we have seen since 2015. And just in this past June alone, China has officially purchased a total of 15 tons of gold, marking its largest single-month acquisition since 2023. And if you take a moment to count the past 5 months of this year alone, China has already bought 700 tons of gold. But if you count the total amount of gold China has bought since 2015, that is the figures that are available, China has bought a total of 14,000 tons of gold from 2015 until now. And what I feel is, hey, it's even more interesting than just China going on a gold buying spree right now, is that central banks all over the world are also going on a gold buying spree just the same. You can see it from the charts of central bank reserves right now, which show more gold than US dollars. And if you look at the figures based on the data available, just this past May, central banks around the world bought a total of 41 tons of gold. You might ask, who bought it? Okay, I couldn't find the information for everyone, but what I could find, for example, well, I already mentioned China, Poland, Uzbekistan, Kazakhstan, and the reason I said both of these are interesting is because whether it's China or the central banks of other countries, they're still buying gold right now. They're buying even though the price of gold is stagnant and sliding down. This means they aren't buying gold to make a profit or to trade it. They are currently buying it specifically to accumulate gold. And if anyone asks, oh, is America worried? How did they respond? America says, we're fine. Because recently, Scott Bessent, the US Secretary of the Treasury, came out and reiterated in an interview that the United States is still a country sitting on the largest gold reserve in the world. The current market value is around 1 trillion US dollars. That is the over 8,000 tons of gold at Fort Knox, which Scott Bessent, he confirmed that yes, it's there, and it's all there. How could it not be? Let's listen to the audio.
I am happy to say all gold is present and accounted for. The U.S. has the largest pile of gold in the world, over $1 trillion at current market value.
Now, if anyone is wondering why China would attack the paper gold market like this, there is an official answer and a not so official answer. The official answer is, hey, gold has dropped significantly, down over 30% since the beginning of this year, so we have to do this to protect major investors. As for the unofficial answer, which is something we've seen China doing all along, it's that China wants to be the one with the power to set gold prices based on the actual amount of the precious metal that really exists in the world. And another significant point to consider is that China has a specific demand, which is that they want the rest of the world to adopt a neutral currency for international trade, primarily for the sake of ensuring global trade stability and achieving a much better financial balance across the board. Which, if we're talking about China wanting to set gold prices in a way that's fair, you know. I've talked about this in a previous clip, the one about China overturning the paper gold market, where I explained that the paper gold market is valued at around 630 billion US dollars, while there is only actual physical gold of only about 500 tons, which is worth only about 70 billion US dollars. Therefore, it means that the actual physical gold is only about 1/9 of the paper gold, which makes the fair price value actually supposed to be around 18,000 US dollars per ounce. but the trading price is only around 4,000 US dollars per ounce or something like that. As for the point about China calling for a global reserve currency to balance the world, when did China start thinking about or getting serious about this? Going all the way back to around March 2009, at that time, the governor of the People's Bank of China was named Zhao Xiaochuan, if I'm pronouncing that correctly, published an official document titled Reform the International Monetary System, which meant aiming to create an international reserve currency not tied to any single nation for the sake of stability. You might ask why they spoke up in 2009. It's because 2009 was right after the hamburger crisis, the subprime mortgage crisis that originated in the United States. And as soon as that American debt went bad, it spread and rotted throughout the entire world. China was one of the countries that had a wake-up call, realizing, wait, what's in my piggy bank? Or rather, in my country's reserve treasury that I thought was so wealthy? It was completely filled with IOUs, which were basically US government bonds or American debt worth nearly $1 trillion US at that specific time. So naturally, China started to think, why on earth should this rotten debt from America end up hurting my own pocket? And that made China realize that day that, wait, maybe US debt isn't actually as good as it's cracked up to be? A country's national savings account really shouldn't be filled up with debt from another country that can just print money whenever it wants to pay off its own debts. So Zhao Xiaocheng thought, well, maybe we should revive an interesting idea from a guy back in the 1940s, John Maynard Keynes. John's core idea was that there really should be a neutral international currency to perfectly balance trade between all the nations in the world. So this idea of John Maynard Keynes regarding having a neutral currency for perfectly balanced global trade, once the US Trade Representative Jameson Greer actually spoke about all of this at the Davos Summit quite directly and in great detail. But at that time, the United States wasn't buying into this idea because the fundamental idea of the United States was that the US dollar had to be the world's reserve currency. They weren't going to accept any other currency as a neutral one. America just wasn't having it. They weren't buying it. And in 2010, the president of the World Bank, Robert Zulik, who was a former US Treasury official, wrote an article in the Financial Times saying that the world should consider using gold as a neutral currency. Neutral currency, which, of course, it went quiet. And another time, in 2016, a man named Ken Rogoff, who was a former chief economist at the IMF, wrote that emerging markets should convert their massive reserves, held in trillions of US dollars, into gold for stability, for balance. And the reason for the proposals from so many people on the timeline about wanting a single neutral currency is because, honestly, in this world, there is only one currency that is a true currency that works, and that's gold. Because we can see that gold is the only asset that has been around for fine. Some say, well, there's Bitcoin, but Bitcoin is young and lacks a track record. Long history. But if we're talking about a really long history, gold has already proven that it beats inflation because since the year 1792 up until the present, inflation, we can see that, hey, everything has gotten more expensive. If you compare it to fiat currency, you'll see that commodity prices, or any price compared to fiat, have skyrocketed. But if you look at assets, prices compared to gold, you'll see that everything has consistently become cheaper, averaging 0.8%, just like that. If prices of goods compared to gold, or if we count from 2018, when the United States started a trade war with China for the first time, even in the portfolios that many people held, hey, keeping it in this is like the best thing ever, which is the S&P 500. Yes, the S&P 500 from 2018 to the present, if compared to fiat currency, it's up 161%. But it might sound like, wait, is that really true? Because if you try comparing the S&P 500 to gold, counting from 2018 until present, it's down 15%. Even US government bond says, which people say, hey, this is a safe haven asset, stable and secure, but if you compare it to fiat currency, as of now, government bonds in the United States are down in the long term. Well, it's it's down 31%. But if you compare it to gold, well, my goodness, it's down 78%. And yes, central banks around the world are now holding more gold than US government bonds, are said to be assets that provide returns. So all of this makes it possible that, hey, or maybe right now, we don't know, that like central banks around the world, what are they doing? Major governments, what are they doing? Or is it possible that the world is moving closer to something called a central currency or gold-backed assets? And this is the origin of the numbers that people are popularizing lately. Gold, dig into 30,000s, $8,000, Lars per ounce. Emphasize UGG. It has never been a target price either. It's just an equilibrium price based on a formula, which means this. There are many formulas that can be used to calculate that if we use gold to back global assets, gold is limited, dulled, right? But global assets are abundant. So we have to think that if we were to use gold to back global assets, what price should gold be at? And there are many ways to think about it. Let's start with TSCS, which is an independent analysis firm. They came up with a formula saying that let's just take it and see how much of a trade surplus China has. China has a trade surplus of 1.2 trillion US dollars. So let's look at how much gold China imported this year. China imported 940 tons of gold. So take the money from China's trade surplus of 1.2 trillion US dollars and divide it by the gold. If you use this calculation method, you'll get the price of gold, which comes out to 38,000 US dollars per ounce. He said he used this method because he tried calculating that, well, if China were to use all its gold to pay off its trade surplus, what would the price of gold actually need to be? Looking at this specific calculation, I'm still left wondering if it really makes sense. If anyone out there thinks it does, please let me know why in the comments. So I tried looking for other formulas to see how others calculate it. There's also a formula called the back in money supply model. This is research by this person. I'll read it out loud. In the gold backing money supply formula, you really have to specify a bit more, like exactly what assets you want the gold to back and what percentage it should back. Yeah, I'll give you an example of how to calculate it using actual numerical data. I'll use gold, taking the amount of gold in the US Treasury that they claim to have. The US government has 8,133 tons of gold. If we convert that to OU, NCES, that's 261,499 million troy ounces. And let's put that aside for a moment. Now, let's use the figure for M2, broad money supply, because this one is broader, including savings, deposits, small-sized time deposits, and retail money market funds. Most recently, M2 is valued at around high 3.05 trillion US dollars. The method is, editor, set it up like this. The first formula assumes we back M2 with gold 100%. Think of it this way. Take 23.052 trillion US dollars, then divide by 261,499 million ounces of gold. This will give you a price of gold equal to $88,150, $4 per troy ounce. This is in the case of 100% backing. Anyone holding gold, if this event were to happen, would probably be incredibly rich. But if you wanted to get the number that's currently trending, which is 38,000 US dollars per troy ounce, it's calculated the same way, which is by saying that we're back in M2 with gold, but in this case, we would only need to back it by about 43.1%. It would come out using the calculation formula the same, making the gold price immediately around 38,000 US dollars per troy ounce. Do you get it now? That it's dropped that figure of like 38,000 US dollars per troy ounce, where that comes from. Now that you know this and understand everything, before you invest or do anything, take it easy. Don't just go like, hey, be impatient, rush to get rich, act recklessly, or we won't be able to recognize the new millionaires, right?